Okay, so in this video, we're going to talk about stop loss orders for beginners. So we're going to basically go over stop loss orders. What is a stop loss order? Why it's important to use, where you can use them, and when to use them, guys. And this is really important because if you're new to stock market investing, perhaps you maybe bought a few stocks and maybe they went down 25%. 40%, 50% or more, and you're kind of worried, should I dump, should I sell, or, what should I do? Should I buy more? Or and you're really frustrated with losing money. And this is the reason why a stop loss order is so important because it's a basically a strategy to avoid massive losses. So the reason why you want to avoid massive losses is because one bad trade can blow up your trading account and then you're out of the game. So you're not going to make money on every single trade. It's like baseball, right? A really good hitter in baseball will hit over, 300. So the key with stop loss orders is basically it just prevents you from massive losses. And when you do make a bad trade or you start losing money, it'll basically cut your losses and just keep you profitable and keep you in the game. So let's get right into it, guys. Okay, so here we are. So what is a stop loss order? Well, I think this picture basically describes it best, but I want to read you guys the definition as well. A stop loss order is an order placed with the broker to buy or sell once the stock reaches a certain price. A stop loss is designed to limit an investor's loss on a security position. So as you can see here, this is an example basically. Let's say you bought, let's say you bought any stock here, XYZ stock, and then the stock starts to go up, but then you notice that the stock price starts to go down. Well, most people, they'll probably hold on to the stock and hope and pray, and as you can see here, the losses continue to get bigger and bigger and bigger, and that's not what we want. So what a stop loss order does is it basically says, hey, this is the price I'm going to sell at. If it continues to go down, if it hits that price, I'm out, and that just avoids massive losses. So like this is really important, guys, so you won't have these huge sweats where you're like wondering if the stock is going to come back, and it just really kind of makes your trading less emotional and more rational. So moving on to the next slide. Okay, so where can you use stop loss orders? So of course you can use them with stocks, but you can also use them with ETFs, exchange traded funds. You can use them on trading options, guys. You can use them options trading, cryptocurrency for you guys out there that trade altcoins, like you trade Bitcoin and things like that. You can use it with Bitcoin. And most stock trading apps out there will allow stop loss orders. So Robinhood, Webull, E-Trade, for you guys in Europe, Revolt, you can use these types of orders on your stock trades. And of course, most full service brokerages like Fidelity, Vanguard, they all have stop loss orders. So basically, anytime you're trading any type of security, you can use these type of orders. Okay, so when to use stop loss orders? Well, I kind of mentioned that already in the one of the earlier slides, but basically you want to use them for several reasons. So the first one is you want to use them on long positions to lock in gains. So if you bought a stock, let's say you bought a stock at $5 and the stock runs up all the way to $10 or $15, you want to put a stop loss along the way so the stock doesn't come all the way back down to $5 and then you didn't make any money. So if you bought the stock at $5 and it went up to $10, perhaps putting a stop at around $9 would be a way to lock in your gains and then you're up 80%. So short-term swing trading position, avoid big losses. So this is really, really important, guys, and this is kind of one of the biggest reasons why you want to use stop loss when you're kind of short-term trading. So if you're buying a stock hoping that it's going to go right up, this is usually what people do on volatile stocks like penny stocks. You want to put a stop loss order maybe 10%, 20%, 25% beneath the latest price, so that if the trade goes against you, you're out the trade and you only lost a little bit of your money. This is also important on stocks that you don't have time to monitor. So for vacations, time away from your brokerage account, let's say you guys are taking a vacation to a different country or something and you don't have time to trade, or you're going to be on the beach or something like that, you really need to use a stop loss order because you don't want to come home for your vacation and find out that you lost a ton of money in your brokerage account. Or anytime you're going to be away from your account. So let's say you buy a stock and then you don't have time to really kind of monitor things. Maybe you're going to be away from your computer or your phone for a long time. It's a good tip. Okay, and also it helps you avoid being emotional and can save your trading account, guys. So one of the things we want to do when we're buying stocks is we want to cut losses when it's going against us, and this just helps avoid the whole emotional, hope and pray strategy that it's going to bounce back and you can save your account because, guys, one bad trade can wipe out your entire account or can wipe out all the gains that you recently made. So you want to use day orders or good till canceled. So a day order is a stop loss, and at the end of the day, if it doesn't execute, it'll be basically the order will be over. Or you can use good till canceled; it'll last until you cancel it. And you want to set up stop loss orders depending on your risk tolerance. So if you're really conservative, perhaps a 5 to 10% stop loss order is best for you. And if you're super aggressive, perhaps you would wait 25%, even some people up to 50% stop loss orders if they're really confident in the stock option or whatever they're trading. So guys, I'm going to show you a real life example of why a stop loss order is so important. So this is a stock chart of Tesla, and as you can see here, Tesla stock earlier in this was earlier in 2020. The stock ran up a ton. So the stock was basically trading over here much cheaper. You guys had to squeeze the graph to kind of fit it. Okay, so this is a great example of Tesla. Early in the year, Tesla was on a major run. As you can see here, the stock was the graph is a bit cut off, but you can basically see the example. So the stock was basically around like $500 or so earlier in 2020, and then it ran up all the way here to about $900 or so. So a lot of people that ended up buying the stock here, they're really happy and excited that the stock ran up. But if you were greedy and you didn't have a stop loss order in place, you would have watched the stock go all the way down to around $350 during the whole global crisis situation in 2020. Don't want to say it to trigger the algorithm. But anyway, so what the stop loss order could have done is you could have placed a stop loss order at around $750, saying to yourself, hey, I like Tesla stock, but if the stock dips below $750, I'm going to sell it. So what ended up happening is that the stock ended up crossing below its 20-day moving average, and then the people that had the stop loss order in, they ended up selling at 750, and then you avoided this huge drop. So you avoided this massive fall because of stop loss orders. You didn't have to sit there and figure out whether to sell a stock or not. And the reason why that's so important is because you need money to buy stocks. So the people that didn't use stop loss orders, the share came all the way down to $350. And this would have been a great buying opportunity. If you used a stop loss order here at 750, you could have bought this stock back again at 350, so you could have doubled your stake. So maybe if you had like 10 shares here and you sold those 10 shares at 750, when it dropped down to 350, you could have bought over 20 shares. But if you just held the stock down to 350, well, now your position is down a ton, and you might not have any extra money to buy more shares. So that's why the stop loss order is so important. It just protects you against massive losses. Okay, so now we're going to talk about what price to set the stop loss at. Well, usually I usually trade with a pretty conservative strategy, so I like to place my stop loss at around 10% below the trading price. It really depends on the stock. If it's kind of like a boring dividend stock, something like that, I might just do 10%. But if it's like a fast moving stock with a lot of volume and things like that, a penny stock, I'll use 25%. And the reason why 25% is because these stocks can go up and down so fast. A 10% stop loss, you'll probably get stopped out within like 30 minutes or something like that. So I think 25% is good. If you lose 25% of your money, it's obviously not great, but your account's not completely blown up, but it still gives the stock time to go higher. And then you want to move the stop up as the stock price rises. So if the stock goes up from like $5 to $20, well, then you don't want to just leave the stop loss at $4. You want to move that stop up. So perhaps if it goes to 20, you maybe move the stop loss up to like $18 or $17. So just keep moving the stop loss up as the stock price rises. So trailing stops can do this automatically, but you may get stopped out prematurely on volatile stocks. So I think trailing stops are a great way to automate this, but the problem is if you guys are trading super volatile penny stocks, you can accidentally get stopped out and then you locked in profits, but the stock might run up higher. So I would say use trailing stocks if you don't have time to monitor the markets, but you can also move it up as well. And then remember to re-enter your stops daily if you choose a day 4 p.m. Eastern Standard Time order. So guys, when you enter the stop loss on your order form, make sure that you're entering it each day. If you forget to change it till good till canceled, because at 4 o'clock Eastern Standard Time on a trading day, your stop loss order won't work anymore. It'll just that'll be it. So guys, I hope this tutorial kind of breakdown of stop loss orders is helpful. If you guys enjoyed this video, please give me a thumbs up and subscribe to my channel for more videos. I try to cover videos on the stock market and other ways you can make money. And if you guys have any questions, you want me to make any more tutorial walkthrough videos, please let me know in the comments. So that's until next time, guys. Take care.